It's good time to get in a management. Now, the numbers for Repro India came out on 25th of May, but the management hasn't spoken to anybody since then. How are the businesses looking like? How's the operational metrics looking like? Joining us on the show to talk about that is Pramod Khera. He's the Executive Director at Repro India, joins us right now in the studios. Good having you, Mr. Khera. Thanks so much for joining in. How satisfied are you with how the quarter went by and how the year went by? One, on the operational front, obviously there is improvement. On the top line front, nudging the 300 crore mark, was that the base case or would you believe you could have done better?
No, that was, we had targeted, we had said our traditional business, which is the print business, will remain more or less stagnant. And which we have done around 220 odd crores for the year. As far as the digital business is concerned, the books on demand business, we have touched 68 crores for the year. And we were targeting around 70 to 80 crores, 70, 75 crores. So it's on track. As per our projections, we have completed the year.
Okay, so that's as far as the revenue growth goes, and we'll talk about FY19 as well. What about the operational metrics? There is some bit of improvement that we've seen both in the quarter and maybe led by the second half for the year as well.
That's right. In fact, when we started off the year, we had very clearly defined our strategic direction for the company, and we had said that cost control is going to be a major initiative, and also recovery of debtors that was stuck. And on both these fronts, we have done pretty well. In fact, we have closed the year with a 14% EBITDA margin of 42 crores. And the production has happened from one unit, which is the Surat unit, which has ramped up the capacity, and we've achieved 220 crores. On the Repro books on demand also, like I've been saying, quarter on quarter, there's been growth, and now in the month of April, we've touched 7,500 books per day. We're selling 7,500 books per day, which translated into a revenue of over 7 crores during the month of April. So that's the run rate now, which was around 5 crores in the previous quarter.
Okay, so 7 crores is the run rate in the month of April, which is on the path of growth.
That's right, yeah.
Okay, now just before I get to that, the operational metrics and the EBITDA margins that you've clocked in for the quarter, is that likely to be the new normal? I don't think your business is impacted by seasons, right? So therefore, would you believe that this 14 or anywhere between 10 to 15% is the new normal for EBITDA margins?
That's right. And in fact, the print business would yield EBITDA margins of 12 to 15%. And the digital business right now is not really contributing to the bottom line because our focus is on growing the business. So, but as it grows, as the scale increases, that also should start chipping in and start chipping into the bottom line of the company.
So you're not looking to increase margins right now. The idea is to increase the revenue, I'm guessing.
That's right.
Okay. So the run rate, as you mentioned, 7 crores in the month of April. What's the ballpark safe estimate that you believe you can nudge in for the year at large? Any thoughts that you've given to this?
Well, yes, obviously we have our plans and our targets, but like I've been saying consistently, we don't give a future guidance. However, the rate of growth that we have seen quarter on quarter, like the previous quarter, the run rate was 5 crores per month. Before that, it was 3 crores per month. And now it is 7 crores per month. So that we should be able to maintain that run rate going forward in the coming quarters also. And so we clocked a total revenues of around 68 crores from the digital business in the previous year, right? Now, going forward, definitely we should see a substantial increase in the revenue that we get from the Repro books on demand in the current financial year also.
Okay. How much is Ingram, the Ingram tie-up, contributing to this books on demand growth that you're seeing?
Well, Ingram is contributing around, say, 25% to one-third of the revenue on books on demand. The rest is coming from domestic books.
Oh, interesting. So what's the kicker, Mr. Khera? Do you believe, so people that I speak to invested in your business say that Ingram tie-up is arguably the game changer from their perspective. You don't seem to be thinking that, right?
No. See, to a large extent it is, because that is giving us access to a huge volume of titles.
How much?
International titles, around 4 to 5 million is what we have currently. And these titles have never been sold in India.
Okay.
Right. So that's a market that is being created. And as we are spending more and more on the promotions and improving the visibility of these titles, we are seeing the sales going up. So that definitely is something that nobody else is selling in the country. So that gives us an edge. That is one. Secondly, if you look at the average selling price of a book, is around 310 rupees. The international titles, the average selling price is around 800 to 900 rupees. So the domestic is less than 300. So this again gives us a better margin, the international books. So that's how the Ingram tie-up is definitely helping us.
And would you be the holders for distributing the e-books of Ingram as well, or only the print books?
We have signed up. Ingram has a division called Core Source and Vital Source. So these are the ones which are dealing in e-books for the academic as well as for the general segments. And we have signed up with Ingram for both of them.
Okay, so on Amazon ebooks or otherwise, you'll be able to sell the Ingram titles in India through you as well.
We will be able to do it, yes.
Have you started on that?
No, we have not
started on that. Okay. But let me get to the bread and butter business. I remember you had one publishing center for the books on demand in Mumbai.
Printing center.
Printing, publishing, excuse me. I believe you embarked upon a spree to have 2 more at least.
Yes,
are they operational as yet? And if not, what's the timeline for the same? And what's the timeline for expanding the number of centers as well? Are you happy with 3 or would you set up more?
Okay. See, one, I had mentioned last time that the existing capacity in Mumbai itself needs to be enhanced. So that is under process. Now, while doing that, we realized that we need a bigger space. So we're shifting
in Mumbai.
In Mumbai itself. So we're shifting to a larger place, and by end of this month that should get completed, and the capacity will get enhanced to around 12,000 books per day from Mumbai itself. Then going forward, the next unit that will come up will be in Delhi, and after that Bangalore in the south. So these are the 2 more which are planned during this financial year.
They will be operational at the end of FY19.
That's right.
Okay. And are you planning on adding more during the course of the next 3 or 4 years?
Actually, to cover the entire country, we should have 5 locations, Hyderabad and Calcutta too.
Okay.
Now, initially we'll start with just putting up warehouses over there so that we're able to stock books there and reach to the customer faster. And then maybe in the next financial year, we'll look at investing in those centers also.
Are you all set for all your capex plans with the money that you raised and the accruals that will come in, or would you need to do some more fundraising over the course of the next 2 years?
Well, the current investment plan that we have for setting up these 2 units during this financial year and the enhancement of capacity in Mumbai, that will be met through the fund that we already raised plus internal accruals.
Okay, so you don't need anything for the next 12 months at least?
That's right.
Okay, last question. I see that your long-term debt has come off, I believe, to 24 crores from 48 crores. Are my numbers correct?
I think so.
Yeah.
I have the exact numbers over here.
Okay, but your long-term debt essentially has come down.
Yes.
Are you looking to reduce it further, or this would be the kind of debt levels that you would maintain?
No, see, the long-term debt we are repaying, and right now it's around 50 crores.
Okay, your current long-term debt is about 50
crores, and short-term is 93, so total is 143.
Okay.
Previous quarter long-term was 56. So there's a repayment schedule which has been happening. Now, tomorrow, once we do some capexes, we might increase our long-term debts for the capex part of it. Otherwise, there's the long-term debt which is existing will be repaid off in the next 1.5 to 2 years.
Okay, your debt equity currently?
Debt equity currently is 0.65.
Okay, 0.65.
Yeah.
So you're comfortable in the debt equity as well.
Yeah.
Okay, great. Mr. Khera, good having you. Thank you so much for taking the time out and speaking to us, and all the best for FY19.